There are so many people that are without work, salaries still reduced, and hours cut. Many have moved back in with their parents to make ends meet. Some have fled the major cities and moved into rural areas to reduce costs. Many unfortunate people have had to give up their homes and live wherever they can. This is not a bump in the road, it's a cliff. You came here for the truth, so let me unveil that for you. I have an extremely jam-packed episode to get into today. We're going to talk about the cliff, not the fiscal cliff, of course, though I will mention that briefly. We're talking about what's happening to the economy. If you want to see the stock market, completely different story. But I want to show you what's happening for real. There are so many companies today that are going bankrupt. There are so many individuals that are doing the same thing. There are factors today that cannot be resolved by printing more money, expanding the deficits and the debt. And I wanted to start with what we have from Neil Kashkari, the Fed president, who is a voting member right now. So in this interview here with Face the Nation, there were a few questions that were brought up, and he's talking about the lockdowns. I mean, if we were to lock down really hard, I know I hate to even suggest it, people would be frustrated by it, but if we were to lock down hard for a month or 6 weeks, things would be much better off, essentially, is what he's saying here. Now that's debatable, that's besides the point though. Here's where it gets interesting. Now, if we don't do that, and we just allow this to go on about in the country, there's going to be flare-ups, local lockdowns for the next year or two, which is entirely possible. We are going to see many more business bankruptcies, small businesses, big businesses, and that's going to take a lot of time to recover from, to rebuild those businesses and then bring the workers back in and re-engage them into the workforce. That's going to be a much slower recovery for all of us. Right now, what we have seen is an expansion of the Federal Reserve's balance sheet, along with the debt, along with the deficits. It doesn't look like that's stopping anytime soon. And of course, depending on the actions of the government, this will actually make it much worse. We know that based on the data that we have here. The issue at hand, whatever you want to go with, besides the point, I'm talking strictly about the economic aspects here. Right now, the US can fund itself at very low rates. Congress should use this opportunity to support the American people and the American economy. I'm not worried about it. If we get the economy growing, we will be able to pay off the debt. That's right. I'll complete lie directly to the nation. Face the nation. And here is Neil Kashkari lying right to your face. Interest rates are, of course, at rock bottom, but that does not resolve the issue. You cannot grow out of it. The growth is not going to magically recover and suddenly everything's going to be okay again. It takes time for this to happen. And the growth that we have seen with the GDP, which I've documented here many times before, you know, the way that it fell down during the financial crisis, it never returned to that trajectory. And the same thing happening this time around. We see that collapse in the GDP. They suggest it's going to be a V-shaped recovery, but we all know that's not going to be the case. If it can't grow at the rate at which we have seen the debt expanding, then you have a big issue. They say it'll be okay, but quite frankly, if the Federal Reserve prints all this money, buys up all the debt, what do you think happens to the currency? Here's just the tip of the iceberg. US will borrow an estimated $2 trillion in the second half of 2020. That's according to the Treasury itself. They've got these added stimulus measures. It's $1 trillion here, $1 trillion there. Hey, why not? Let's send $1 trillion to each and every person. Why not? This is the system that they've built. They don't know how to make changes otherwise. They don't know how to fix things. They don't know how to resolve issues. So they print money. It funnels through a system which enriches the globalist elite, and the crumbs come down to one group or another. The individual ultimately gets the short end of the stick. More than 100 CEOs warn Congress of catastrophic consequences for small business without relief bill. That's right. If you don't give money to the quote-unquote small businesses, then you're going to have a serious problem. Well, we had some serious problems already, and that was with billions and billions of dollars going to companies that are not small, that are publicly traded, that are making billions of dollars a year. And we have seen all of this coming through at this time, and here they are again, in a sense, echoing what we saw back during the financial crisis. You better do the bailouts, you better do the bailouts, everything's going to be falling and all this nonsense. But we know there's going to be more money handed out to these big businesses. The small businesses, they won't get anything. Look at the US construction spending right now has declined. You could see the red bar right hand side. That's the month over month data. 4 in a row at this time in the negative. You can also see it year over year weakening tremendously throughout 2020. People are worried. They don't know exactly what to expect. And this is just a further breakdown you could see in the educational, amusement and recreation, and commercial. All of these have declined recently here. Now, single-family homes have increased from their bottom, but it is still down quite significantly. We have seen many statistics, in fact, that have come off the bottom, but they are still well below where they were prior to 2020. I want to make that clear. I know the trolls won't actually watch the video, but for my faithful subscribers, this is what's been happening. A lot of these different statistics have bounced off the bottom. Now, that doesn't mean we can't have a dead cat bounce at this point for a lot of these stats. That is absolutely possible. And as you see, we go in later into the year, there's going to be a lot more turmoil. What that affects, we'll see as it happens. It appears another business has gone bankrupt. Lord & Taylor files for bankruptcy as retail collapses pile up. You have to understand, this company is from 1826. It's been around. There have been so many booms and busts along the way, and now here we are, 2020, they go bankrupt. It just says something that it's not because these are hard times right now. There have been many hard times. I mean, come on. All the way through the 1930s, this company survived. All of the busts that took place in the 1800s, they survived them. Right now, today, they're getting punished. Tailored Brands files for bankruptcy as the sales are down significantly. Men's Warehouse owner Tailored Brands filed for bankruptcy on Sunday, adding to the list of brick and mortar retailers that have been certainly dealing with the fallout from this current crisis. I'll zoom in on this in just a second. I just want to read in the top right corner. Chapter 11s filed by retail chains in the first half of 2020 represented more than $20 billion in aggregate liabilities. Here's the chart right here. You could see annual cumulative Chapter 11 liabilities, showing us 2016 all the way to 2020's numbers. It's broken down into billions of dollars. Near the top of the chart, that's 25 billion. So you've got companies like Sears, Toys R Us, not that far behind. You could see on the right-hand side there. That was a big one. Many other names are on this list, and it just shows you that any business, even if they're $1 billion business, they can fall, and it doesn't have to be clothing stores or any related business. It really could be anything at this point. Nearly half of all furloughed workers now believe that their temporary layoff will become permanent. We have seen the statistics that have really shown that this is probably the case for a large percentage of them. The unemployment rate will remain persistently high, although they have told us many times that this is going to go down and they will achieve lower than 5% unemployment in a relatively short period of time. We'll see if that's actually the case. I can't hold in on my laughter. I can't keep a straight face trying to actually report on that information when it is clearly a joke. Too many people are being hurt by this, and they need to know the truth regardless of how painful it is. Macau's gaming revenues tumbled 94.5% in July. I just talked about Vegas. I believe it was the previous video. Now we've got the data for Macau. This is significant, of course. Huge impact, as you can see how it is affecting all these different businesses and will persist for a period of time. And now I want to change gears for a second. Really important information coming out of the Financial Times. I want to talk about what's happening with these derivatives. I want to look at some other factors as well. Take a look. Giant pool of low yielding debt pushes investors into riskier assets. This is something I've talked about on numerous occasions. This just gives you the breakdown. This is the percentage share of the bond market. You can look at the sub-zero yield. It goes 0 to 1%, 1 to 2%, and so on. That sub-zero yield is showing us over 20% right now. Over 20% is in the negative. That is so extreme. I'm going to show you the total in just a second. But if we go all the way up to here, imagine this for a second here. If we look at everything sub 2% yield, that's 86%, I believe it, or 83%. 86 or 83% of the total, talking about in the world right now, gives you less than 2%. What do you think is going on in the bond market? It is sending a very serious signal that most amateur investors have no idea what it's all about. Of course, because they've never bought a bond. They don't know what bonds are. And with yields like these, they probably never will. This is an extremely bad scenario because the value of money is declining rapidly. And as I said at the beginning, it's pushing investors and speculators into riskier assets. Look at the global negative yielding debt. Right now, this is sitting at $14.6 trillion. All right, this is big news. We had seen it peak out at approximately $17 trillion right at around the end of August 2019. This came down to a rate of about, I'd say, $11 trillion earlier this year, and it has come up ever since. Imagine you are willing to buy an investment. You're going to get less money back on it. You put in $1, you're getting less than $1 back. It's not exactly giving people incentive to put in, but what investors are thinking about is this is a quote unquote guaranteed investment. And with so much uncertainty, these big investment companies are thinking, well, at least I know that these German bunds will be here in a couple years. We could drop the money in there, move it around if we need to. This is just the article connected in with that information out of the Financial Times. Desperate hunt for yield forces investors to take extreme risk. More than 60% of the global bond market now yields less than 1%. The value of money is declining rapidly as they print more and more money, as they devalue these currencies all the way to the floor. They are literally forcing this down. They are pressing it, applying pressure, and that will have a dramatic blowback. And there's nothing they can do. Two things really quickly. CLOs, remember these collateralized loan obligations are about to get easier for the Robinhood crowd to buy. Janus Henderson files to launch an actively managed US CLO ETF. Thank you. I always wanted to get in those CLOs. I didn't understand them. I didn't know where to get them. But now I could just buy the ETF and I'm going to be able to make all that profit. Sure, I don't know what the heck it is. And now it's even more convoluted because it's squeezed into an ETF, putting one extra layer in between you and that supposed asset on the other side that is just garbage. But hey, stop being so pessimistic, right? I don't think people understand the way that the financial system works. There's a reason why these financial establishments have the big towers. They are the ones where the CEO gets a $30 million bonus, where they've got the private jets, where they are making all the money, where they pay the least taxes. It's because they take these products and they package them up and they make them look real fancy, put a nice little bow on top, and they sell it to you as a AAA product. But if you would spend the time and actually give it the sniff test, you would find out that the inside, it really stinks. It's rotting from the inside out. But you didn't know about that because you didn't give it the sniff test. Because you were too busy scrolling on Instagram. You were too busy watching television. You were too busy doing other things instead of investing in yourself, in your knowledge. But this is the world we live in today. Just to finish off the video, US-China Phase 1 tracker. China purchases of US goods way behind on what was supposedly promised in the fake Phase 1 deal. Here it is right now, just showing you. You can see the statistics if you're interested. I just wanted to give you an update on that. This information, it was posted, I believe, 1 week ago, but the data is as of June. That's when it was last totaled up. There's no possible way that they'll meet the obligations, and with tensions actually getting worse every single day, clearly we have a big problem. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that by clicking one button on the way out. You really do help me out. Thank you very much. If you want to check me out on Instagram and Twitter, I'm posting information every day. You can do so at The Money GPS. Do you want to learn how to sell stuff online? Well, you can pay $1,000 for many good courses and many not so good courses out there. I have a free e-course for you. I get trolled every single day. People are telling me that I sell a course. I guess if it's $0, does that count as a sale? Anyway, the AmazonGPS.com. Are you interested in the financial system? You want to know what's going on? You want to understand the truth? These two books will tell you everything you need to know and explained in a very easy manner. You can check them out at the link in the description if you want the audiobook, themoneygps.com. Hang on a second, don't go anywhere. This is a really important video. It has so much data in it. If you haven't seen it yet, you definitely want to watch it. Click it. I'll see you there.